Today we would like to review the upcoming US and UK economic data. We think this morning it's important to do a review of what happened last week, as there was an awful lot of data for investors to digest and also reflect on how markets price that information. So we obviously had the US election last week with Donald Trump coming out victorious, but I guess what financial markets hadn't really expected was the size of majority that he would win, but then also the likelihood that the Republicans also secure the House. So that would let President Trump push through more policy through the US government. We also saw central banks from the US and the UK cut interest rates by 0.25%. If we think about the comments made by the Fed afterwards, they are a little bit less confident on inflation coming back to target. That's given that President Trump is also coming into power, and we know he likes to use fiscal stimulus. And also in the UK, the Bank of England revised higher their 2026 inflation. So that's now not expected to come back to target. So I guess both central banks more cautious around the inflation front. So if we think about what's upcoming this week and sticking with that inflation theme, we have inflation data coming through from the US. Now, what we're seeing is that headline inflation, so that's the entire basket, come down from 2.6 to 2.4%, which is the expectation for financial markets. However, what we do see is when we look at core inflation, so that's that stickier component, so removing more volatile components such as food and energy from that basket, that's expected to remain at 3.3%. So those stickier areas expected to stay higher for longer. And as we know in the US, it's services inflation that is remaining the stickier component relative to goods. So that theme markets are expecting to persist. Then if we move over here to the UK and think about the data that we're going to see this week, we have the GDP data and also employment data this week. Looking at GDP, that number is expected to be similar to what was printed in the previous quarter. So those numbers are about the same, 0.7 versus 0.8. But it's actually the employment data where financial markets are expecting some change. If we look at overall employment within the UK, markets are expecting the UK to actually lose 50,000 jobs at this report. And if we split that out between the public sector and the private sector, we're actually seeing growth within the private sector. Not a lot of growth, but around 12,000. That's better than the last month where we actually saw a negative reading. So we're seeing employment expectations falling in the UK. However, that might be due to the higher number print that we saw posted in the last month, which was a gain of 373,000. So that could just be a bit of normalization coming through the market. So thank you for watching today's video. Please keep an eye on the YouTube channel to see our further updates this week.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.